Konnichiwa. Ni hao. Salam, my good friend. Hey, good morning, everybody. How you doing? Well, you look good. Good. Well, let's get going. Hey, welcome to your daily Forex trading strategy session. It's about 7:30 in the morning, New York time, 2 hours before Wall Street opens. It's June 30th, a Tuesday. Tuesday, June 30th, 2015. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Today I'm going to cover technical analysis, and I think that's about it. Hope you don't mind. So anyways, let's get going, huh? Wonderful. Thanks for attending today. Let me remind you, trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. I think you should stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right. So Mark says sell euro on rallies, Wayne. That goes to yesterday's conversation. And yesterday's conversation was how to trade this gap and how to safely trade sort of the reversal. The reversal theme I've covered probably 3 times in the last a month or two. Probably, let's say over 6 weeks. And yesterday's pretty much the same. If the market's going up, that you want to be a bear, you have 2 choices. Take a high risk, high reward shots off of key psychological levels, or wait for the market to reverse. Is that right, Demeter? Never finished uploading? I uploaded it and I saw it in the process of uploading. You say it never finished, huh? So anyways, after yesterday's experience, which trading style fits your personality? Have you made a decision on that? Are you going to short the psychological levels and jam your stop? Or are you going to simply sit back and wait for the market to reverse and then start shorting? Yeah, just kept going up and up and up and up and up. Did you ever consider buying it? Probably pretty frustrating, right? Yeah, if you go to the 1 minute, the 1 minute actually traded quite well. Okay. There's Auckland, and there's New York, right? And there's London. So we can do New York. You can do things like you should have support and resistance. I can eyeball this, right? One of these, let's say you bought, never made a lower low. Every oscillator crossing you could buy. Notice how it doesn't make a lower low, right? Just imagine, buy, 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 right? Buy, 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 so on and so forth. Pretty late in the day for some of these moves, but still, and if you go all the way back, there are plenty of little opportunities, right? Well, yeah, that isn't that the interesting part though, Mark, right? Mark's like, yeah, but he's anticipating the big crash from the Brexit. Um, yeah, isn't it funny? It's like a phenomenon that we make up. Like I'm not saying that. I mean, what you say is absolutely totally true, but we were fearful of nothing, right? Like nothing. You were waiting. You were making it up in your mind, I guess, and we all do it, right? But if you were a computer and said, well, it's just making higher lows and higher highs, I'll keep buying all day. And that was part of my message yesterday. Don't short unless it reverses. Another way of looking at it is keep buying until it reverses. But certainly don't dump it, right? Yeah. So one of the lessons we discussed yesterday, technically speaking, was the gap fill. And you know, this area here is where the gap is filled. So we're in this tricky situation here. If you're a bull, you'll want it to start heading up. If you're a bear, it's consolidated. Okay. And I would probably look at this as not making a full retracement yet. So I think if I were a bear, I think I might get rid of that. If I'm a bear, I'm probably going to look for something like this. You know, I don't know, I'll make it simple like that. I'd probably expect the market needs a little more time to get people on the clue train. Yeah, Mark, I discussed the yen very specifically yesterday. Does everyone understand why that currency pair behaved differently? Didn't even try to fill the gap. Safe haven flows and the market was net short. So some of the market, let's say a big chunk of the market, is simply getting out of their short positions. And another big part of the market are people buying the yen so they buy JGBs as a safe haven. So it's a double whammy. I said yesterday that its move is magnified. All right, Bob asks a good question. When will the USD yen fill the gap? And it didn't fill the gap yesterday, so I wouldn't play that trade anymore at all. Don't worry about it. Don't make a big deal out of gaps. It has to go up eventually. According to whom? Think that way. I want you to think the other way. It could fall forever. Okay? It can and it will fall until the market decides to do the opposite. But I've seen a lot of traders blow up their trading accounts because they're like, well, it just couldn't fall any farther. Mm-hmm. Sure it can. So just be careful. So anyways, I hope you can see that this massive drop isn't necessarily the reversal yet, is it? This is a buy zone for bulls, and way up here would be the sell zone for bears. And we're at sort of 50-50 of which one's going to happen. Nature abhors a vacuum. Yes. But in that case, people are moving their money for very specific reasons, and that's why that anomaly has been created. So in this case, the vacuum created the hole. People moved money. People got out, people got in. Had a big effect, right? So remember, when you get out of a short, what does your broker do to offset you? Puts you long. So you were short yen, suddenly you're long yen. And then other people get in and say, I also want to buy some yen because I want to buy JGBs as a safe haven. Huh, more yen buying. So people are worried about Greece leaving the Eurozone. They don't give two hoots about the gap. And that's why the gap exists. So anyways, yeah, so I wouldn't mind this going a little higher because then you get the scenario of selling off the weekly and maybe creating a lower high or even a double top. I wouldn't be shocked if this was a double top. Okay. Now, if price does eventually make another lower low, then we can count this area as a lower high. Okay. So we're close to bearishness if you want to be a bear. But I wouldn't be aggressive yet. Can you see it now? See, let me get rid of these verts. Now let's look at the same thing as a bull. What do you want? What do you want to do? It's very important to be able to understand the person on the other side of your trade because you know their fears, their strengths and weaknesses. Do you think a bull has noticed the higher high? Okay. So let's say this has nothing to do with your opinion on the trade. Let's not confuse your opinion. Right? We're just doing analysis. So if you were telling someone how to trade this as a bull, you would say either the 382 or 618 would be interesting, right? So even if the bears get what they want, where it makes goes up a little more and then comes down hard, They're going to buy it right there, around 110.80. It'd be 110.50. Let's say 110.50. Okay. So this is where fractal geometry really helps. So this is our job, right? What would a bull do? What would a bear do? Where are we now? I think those are pretty good questions, right? So this area that we've touched is key because it was the gap fill. Okay. There's some high side resistance, low side support. Now you just have to win or trade both ways. So 4 hours says down, 1 hour says up. So up into here, then down into here. And we find ourselves in London tomorrow down here around 110.60. Right? How many hours is it going to take to go from overbought from oversold to overbought? So we've had a few hours. So let's say 4 hours. It's 8, so that's about noon. So about up until the London close, down New York afternoon, and Asia tomorrow on the 4-hour cycle. And then London boys buy it up, New York follows. That would be that plan. I'm not saying it's do that. I'm saying that's how you could interpret the technical analysis. Okay. I've been around the world and I. Okay, it's back to the USD CAD. How many people remember doing this? Like you remember, you see this chart and you remember it like it's an old friend. Yeah, well, it's the analysis, right? So we're at the high end of our green zone, getting kind of close to the top of the channel. Running out of room here. Some might argue that it's not going to break to the upside, that we're either going to get Canadian strength or US weakness. So keep your eyes on a rollover here. If it was going to head down, this is exactly where it would head down. So you can investigate and say, well, if Canadian dollar is going to get strong, I wonder if CAD yen will recover. So we're on the monthly central pivot. Just kind of eyeballing the price action and stuff. Is it bullish, this market? We're about to get a 5-8 cross up. But our resistance is in here, right? The last day of the month, and this currency pair is on the monthly central pivot. It's curious, isn't it? So there's our range. Igor says overall that technically and fundamentally, still very neutral. Yeah. Oops. So like I'm thinking the dollar would have to get strong. Why would people buy the dollar? Because the Fed's going to raise interest rate. We don't know that for sure in September. And September's a long ways away, yo. So it really begs the question, when will they buy the dollar in anticipation of the Fed finally raising interest rates for the first time? Is it going to be in July? Right. So, try to put it in a human context. When are these billions and trillions of dollars going to move? If not today, when? That was a big part of our conversation yesterday, right? Asking big questions and searching for the answers. Which one? USD yen? I don't see anything. I don't see anything big. It's moving. It kicked off, what was it, yesterday's low? Okay. That's a big move for you? So, mark your zones. Okay. And then, this could be a tiny little issue. But if you're a bull, you could find yourself in this situation. Okay. You'd buy the green areas. So you say you believe it will be bullish now. That's a very dangerous game to be playing. Listen to my language, right? What is my language is, I rarely say I believe I'm right. What I say is that's just what the analysis tells me, right? I'm not Beethoven, but I can play the. So in this case, I don't see anything bullish on this. There's just this tiny, I mean, you'd have to be on like a 5-minute chart doing this. But even then, you're so late, right? It's like, um, yeah, I mean, if you made the trade down here, okay, then you deserve it as long as you had a logical reason on a higher time frame. Where some traders get caught is they say, "Look at this great move I got on this USD yen," and I say, "Yeah, that was a great trade. What put you in?" And you're like, what did you see? Did you was the 15-minute ready? No. What about the hour? Well, that was already passed. And then what about the 4 hour? Yeah, well, it's just sort of buying a falling knife. Hmm. And you bought it right into this resistance? You bought here? Actually, it's not true, right? Because if you did it right, you were actually in here. So I'd say, okay, so it was a bit of a scalp. Yeah, you could make like 5 pips, but now you're in a very dangerous area, aren't you? And you're like, yup. So I say, all right, well, you know, I guess maybe you didn't risk much and you didn't make much, right? Doesn't look as good after, right? So that's why I start on the higher time frames and say, okay, well, this little higher high, higher low scenario, the maximum reasonable potential on this is, maybe 20 pips. What it does tell some of these bears is, take a break. Okay. Yeah. So you don't assume support and resistance is going to break unless you're in a trending market. In this case, what you're suggesting is resistance will break. Okay, because we're in an uptrending market. I wouldn't define it as an uptrending market yet. Well, so like Greg says, it's not reflecting the Greece news and stuff. Yeah, but do you want to take a trade that has a maximum of 20 pips and then there's always this looming uncertainty that something disastrous can happen any minute? It doesn't feel good to me, right? You're like, I might make 20 pips, but the market could move and I could lose 100 or I could make 100. Well, um, right. Well, let's see. Let's change the variables here. Borrow $10,000 from your father-in-law and gamble it in a degenerate style in in the in the foreign exchange market. So, and see how much risk you want to take. Right. Did you guys behave differently in that case? trading your father-in-law's money versus your own personal money? Mhm. You're like, I'm not even married. Would you trade? Uh, You wouldn't? Well, then you're more mature than me, or most. Because I think what happens when I look at people's trading, how about that? When I look at people's trading, because I've mentored, trained a lot of people, and what I see is everything goes well most of the time, and then out of boredom or fatigue or emotions, all of a sudden there's this cluster of like insane series of trades. And it doesn't have to be big, but all of a sudden it'd be like, what are these 3 or 4 trades? I overtraded. You know, these were important. Um, but there is something called the Hawthorne effect, which states that if you study a subject, and this is like if you're peering through a glass mirror, right, and you're looking at somebody, they will behave normally unless they feel they're being observed. And their behavior will change because you're observing them. The Hawthorne effect. And your behavior changes if you believe somebody's watching you trade. So you say, I would trade my money the same as blah, blah. You say that, and I'm not disagreeing with you, but there's extreme likelihood that your behavior will change when you start trading other people's money. How about this? And here's another way of making things work. Because I bring this up because a lot of people say, "Well, I'm going to put 5 grand into my Forex account, and if I make it, great. But if I lose it, I'm out, and I'll go find something else to do." Which means you always have an out, and you'll find a way to lose it because you have an out, right? How did Cortez and his 100 Spanish men conquer Mexico? When they arrived at the shores of Mexico, they scuttled their ships. And he said, "All right, boys, we either go back to Spain filthy, stinking rich, or we all die here. You choose." It also helped that they had smallpox, they had cannon, and they had horses, and even steel swords. So they had a technological advantage. So, sometimes you should scuttle your ships where you just can't. If you lose that $5,000, you die. And your behavior will change. So, a less extreme version is to sit down with your spouse and say, okay, I'm going to take, some family money here. I'm going to put it into a trading account. And my goal over the next 3 years is to grow this account into a reasonable size so I can trade it, um, either as a living or as a significant income. And I'm going to have a meeting with you every Friday. I'm going to report my trading week. We will go over my trades together, and I'll explain them to whatever level of detail you would like. I will go through every chart. I'll print out a chart for every trade, and I'll explain them to you, and we'll go over the results, and then we'll together identify strengths and weaknesses, so I always know what I should be improving on. Would your trading behavior change? I would venture to say yes. And then take it one farther and you say, honey, if I have a stupid trade, a stupid trade. Just define it. If I lose more than, X number of pips on a trade or X number of pips in a week or a day, because you're trying to avoid the bloodbath, right? The first step to success is to stop the bleeding and just completely stop the horrible days. Because I've seen a lot of traders too that do, they'll have 4 really good days in a row and the 5th one is a blowout, right? So you say, okay, honey, if I make a bad trade or I have a terrible day or terrible week, whatever the definition is, I will sleep in the bathtub or I will sleep on the floor of the kitchen. So we'll get the little sleeping bag and a pillow and, we'll set up a little bed, right, on the kitchen floor, and I'll sleep there like the filthy, dirty, disgusting dog of a trader that I am. And it'll be embarrassing and uncomfortable, and I will not do it again. Do you understand the point? So that you never do it again. Hey, look at price is coming down. Oh, snap. Okay, so changing your behavior is a very important thing. And what I was saying before is a lot of people say, oh, I'll put $5,000 in an account, and if I blow it out, I'll just go find something else to do. So it's okay losing the money because you've already conditioned yourself, right? So you can always say, oh, well, it was only 5,000, or well, it wasn't really my style, or I don't really, it's all manipulated by the central banks, stuff like that. And you give yourself an out. So you need to have something worse than losing money. Because if you tell your buddy, he says, hey, how did that Forex thing go? Like, I put $5,000 in and it didn't work out. I, blew up the account. And they're like, yeah, sounds typical. Everybody does that. It's okay. And you're like, yeah, it's okay. And you walk away. It's okay. Yeah, it's fine. 95% of people lose, so I'm just normal. So you need to have something worse than losing money. And it's like shame and embarrassment is much more powerful than losing some money. Okay? So, remember that, how many times have I said it recently, the sickening work ethic. The sickening, ridiculous work ethic. And 95% of people will say, Wayne, that's a really funny story. Ha ha, yeah, it makes sense, but it's funny. Ha ha ha. Ha 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 ha. And then, so 95% of people will laugh, and that's a funny story. Good one, Wayne. 5% of the people will do it. They'll like, you know what? I'm all in, Wayne. I will do that. Guess which 5% or which traders are most likely to succeed? Take a guess. And then decide what you want to do. So here's a USD yen, and like I said, we're just moving sideways, and that whole area, whoever said, wow, it's really going up. So I just quickly back out. I'm like, okay, it's at resistance, probably going to come down. Boom, came down. That's called having it, right? You can't be chasing price around. Blah. If you found a way to get in at 122, you'd be fine right now, right? And I'd be sort of eyeballing this whole area. But, okay, let's do another currency pair. Mm-hmm. We kind of looked at kitty cat. I guess let's do some Aussie buck. Yeah, we'll do some kitty cat and the yens and stuff. Okay. Boom, 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 boom. Oh, nothing's changed to me. Seems about. Come on, how many times do I have to click that? There we go. Like there's moderate resistance in here, right? And I see stuff up here, but you see weeks ago up at 78, that was a short off the 3A2 Fibonacci retracement. If I go out to a daily. So some are still waiting for you to justify my trade. We had this going down even farther. There we go, to 72.5. That's still in play. Right? Do you have plans like that? It's good to have focus, isn't it? So someone trading that at this area as a sell zone. Right? To them, it's easy, right? They're like, boom, I'm at 77. I'm going to drop it like it's hot. Drop it like it's hot. Drop it like it's hot. Because this is going down to 72. So I'm going to sell it at 77, pick up another 500 pips. They sold it at 78. Yeah, so someone says, is it? That doesn't look sideways to me. Right, so somebody's trading it that way. Somebody, somebody do. All right, wow, that's my first Queen song in a long time. All right, so that's kind of, that's an interesting area, right? Could be. Could be a rabbit, could be. So pick your zones, guys. Pick your zones. Be prepared. Ask yourself, are you going to take a shot on this one, the downside? New York is opening. London has not made a higher high. We're at a psychological level, potential role reversal area. Okay. Yeah, it was a couple of weeks ago. It wasn't Governor Stevens, though, right? But one of the directors said that it's not worth 75 anymore. Ah, Mark brings a good point. It seems relatively strong compared to other currencies. Beautiful. So when that changes, will you be ready? Because remember, it's not what's happening now that matters, right? Like yesterday's Euro USD thing, Euro USD was fill the gap. That was the strategy. And you just keep doing that until the strategy fails, which would just turn out to be all day. You had probably 30 trade setups. So in this case, you're sitting waiting for the next trend, right? The next strategy to come into play. Because the bulls, they bought the dip, they bought the dip, they bought the dip, they bought dip, they bought the dip, they bought the dip. So you didn't buy the dip unless you're in at the daily central pivot point. If you're not in around this 382 Fibonacci retracement central pivot point, you're not a bull. How could you possibly be bullish? And you didn't buy the 382 at the central pivot. Beyond me, like what is it that you're doing, right? So if you're not a bull, then you must be a bear. So what are you waiting for? Well, how about a double top at a psychological level and then a reversal pattern? Boom! A reversal after a reversal. Okay? Cool. Yeah, yep, John, and that should all be obvious information, right? And I've asked you to develop a 6-month, a 12-month, and a 24-month outlook. So, you know, okay? So that is in the public domain now. Everything that you either wrote or copied and pasted. And that's fine. That's sort of yesterday's analysis, last week's analysis, last month's analysis. All of that's been in play forever. Cool. But that's not going to be next year's trade, probably. And 2 years from now, most definitely not, because things will change. And this is why, you know, I always have to tell you, past performance does not predict future results. Because let's say I sold the Aussie dollar every single day for 3 years, and then all of a sudden, the next 3 years, I'll probably be buying it all back and then some. So in this case, if you're not a bull, you must be a bear, or you're just not watching it, which is fair enough too. But shouldn't you at least have this planned out and ready to go if you're not a bull? And that's what you get paid for, guys. Remember, you don't get paid to trade. You get paid to do solid analysis and then have the patience and discipline to enter your trade in such a way that you make easy money. Think about it. It double topped at the weekly central at the psychological level of 7700 in a falling market. I think generally speaking, we can agree that Aussie has the potential to hit, you know, let's say 70 before it hits 80. Well, I shouldn't say that because it's easier to go up because of the floor, but I don't know. How about this? I wouldn't mind being short. Wouldn't bother me to be short the Aussie. Like if someone said, "What did you do today?" I'm like, I did something stupid. I shorted the Aussie dollar, and I just don't know. I just don't know what got into me, man. I totally regret it. No, I don't think I'd regret it. But why are we waiting for retracement if this is already retracement? Not sure 100% understand that, but I think I know where you're going for. It's price action. If this is, you know, no, we're really talking about this. It's just I was looking at it on a much different time frame, but that you may be playing as a lower high, which predicts a lower low on a high time frame. So on the lower time frame now, similar things will happen. That's called fractal geometry. where it will also make a series of lower highs and lows, right? To eventually fulfill the higher one. Okay. And remember, higher time frames just doing the same thing: lower high, lower low. So you're just, when you're in this bigger move, and the bigger move now is the higher time frame, like a daily chart or a 4-hour chart. Okay. And then now on a 15-minute chart or an hourly chart, much smaller time frame, you're going to look at the same patterns, right? Hit a key reversal area, make a very significant drop, and make a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And you just keep doing that forever or until that stops. Okay? Yeah, Orange is probably better to sell Aussie yen for now. For July and August, sure. But not forever. So let's do some yen pairs if that's okay. Do you mind? Is it okay? Some people are going to say yes. Some people are going to say no because I asked 2 questions. Which one should I do? What am I thinking? Let's do this one.
The April Canada GDP data in just a few seconds. Minus 0.1% month-over-month is 0.2 lower than expected. Year-over-year at 1.2% is 0.3 lower than expected for Canada GDP in April.
Negative number. Thank you, TradeTheNews.com. So negative 0.1. Year over year, 1.2. All right, not good for the kitty cat. Just hit the monthly support pivot. Baby, slow down. The end is not as far as the start. Please stay a child somewhere in your heart. Be interesting to see if that USD CAD could test and maybe even potentially break the upside of that channel. That's the monthly support pivot. On the last day of the month, though, right? So a bear is going to look for the up and then the down. And a bull has got this set up. Even before the news, they had that set up, right? And where are the stops? Where are the, if bulls are in this or buying it, which I wouldn't recommend, but where would they put the stop? Probably about there, right? So if that occurred, it would drop pretty quickly to about 97.80 and then would bounce back up to about that zone if that occurred. So what I'm suggesting is if it did, you'd get one of these things. It's called a rule reversal, isn't it? So anyways, I think if you were a hardcore bull on this pair, you would want to buy at the 618 and you don't really want it to go any further. Like that has to be the bottom for you if you're a hardcore bull. Right? Do bulls like buying 786s? No. No, 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 no. Marcia, what's silly got to do? Got to do with it? Right? Where else would a bull want to buy this? Think about it, right? Where else would a bull actually want to buy this besides the 618? Maybe a double bottom, but then you need the reversal pattern, right? Right? Just those are pretty basic questions, right? If there was a bull in the market, where would they want to buy? Where would their orders be? Well, 618 is a good one. Double bottom? Well, a double bottom should have a double bottom, then a high, then a low, and then a higher high. So they're probably just going to buy there. Okay, fine. Next, where would the bears sell? How about the same place, just for sake of argument? The same place the bulls would buy, the bears would sell a 618, wouldn't they? Does a bear want to see a 786? Does a bear want it to come all the way back after that news and then triple top and then sell it off at 99? They'd probably run out of patience, right? And there you go. Mm, 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 mm. So there we go. So you sell the resistance or you buy the support, right? right? Is it more complicated than that? Okay, it made a 50% retracement and then reversed at the weekly support pivot. The bears would have sold it off the resistance, the monthly R, but it's a roll reversal. The gap filled, you see that? Exactly to the pip and then reversed. So let's talk about that. Were there, assumingly institutional investors ready for this? Did they have their orders waiting? Was that part of their analysis to fill the gap and continue mission down? Again, here's the gap. All right, that is the gap. It went from the bottom to the top and then back down. Okay. Now the bulls, they were also waiting. Somebody was eyeballing the 50%, in particular, as a weekly reversal pivot point. So they were ready too, right? There's the monthly. There was probably some orders there that never got executed, but I'm sure they were there. And the point here is that these traders were patient and disciplined and waited many, many, many hours. Many hours. 12 hours, 20 hours, that kind of stuff. Right? So where are we in the process? Well, that's where your analysis comes in. Okay. A 50%, I would say, would get us to 140. Maybe just a little higher, 140.50, and kind of capture this old resistance up here. Okay. Now, what would a bear do on this chart? Well, a bear is going to sell in this zone here between the 21 and 55. And once again, this is where, like, why you, as a bull, you need to buy low. If you're going to do the 1, 2, 3, don't wait and then buy it high. Because when you buy high, you're buying at someone else's sell zone. Because bears sell high. That's why you have no right? So this zone here is where a bear would like to sell. Okay, and your next candle could be, next series of candles could be like this. Why? The euro stays weak, the yen stays strong. Right? I don't see why that couldn't be the case. Which one would you like? And now prepare for that. Okay, let's get off the 4 hour. Let's look at a 5 minute. So what's your plan? You know what would require a lot of patience? Wait for the 155 to cross on a 5-minute chart before you go bearish. Like this, right? That would be your first short. Not up here. You didn't short this. You didn't short this. You didn't short this. Lower low, lower high, 21.55 cross after the fact, right? Resell, down, boom, sell, boom, sell, boom, 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 so on and so forth. Now a bull, they love that it kicked off that 50%, and they're buying dips. Mm, 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 mm. Right? If you're confused which one, pick one. Right? If you're confused whether you should be a bull or a bear, just pick one. And as long as it's making higher highs, buy the dips. So you know it's over when it does this. No longer bullish. And the bears are just waiting for it to happen. Take care, my friend. Let's do some commodities and wrap her up. Gold. Love it how it just doesn't change, right? I'm still bearish. Nothing seems to have changed. We're in a spot where, it's foreseeable that it could bounce. But I don't think it can fall significantly farther. I don't think it can rise significantly higher. But again, the question mark is what happens with Greece. Well, I can't really answer that, right? So we'll wait and see. Didn't feel like it today, Igor. Sorry. It's on this. It's on forex.today, so you can do it whenever you want. Just trying to simplify the trades, Igor. Over the summer, I don't like to overthink too much. Take a look at crude. Still in the range there. We've had our down week, but it's not a significant drop. But we're on the daily 55. If we break that, could be the beginning of a downtrend, and the downtrend behaves this way. I'll show you. How should I do this? Let's do it this way. You get a rollover of the 55, right? You get, or of the 21, I mean, I'm sorry. You'd get a rollover of that, and price would do something like this. I'm not expecting it to fall to 44 again, but that's what the technical analysis would do. I don't see that happening, but if this was a currency pair, I would have no problem doing that. Now, because it's crude oil, I'd say, well, that doesn't seem to be reasonably possible. But that's what the technicals tell you. But remember, it's more to trading than a technical, right? Am I a bull in oil? No, my gosh, no. Look at my analysis. We've been doing this since last year. So our plan was to sell it here at 63. And just not up is kind of where we are. Well, the world would drive it to 41. Remember, it's not a video game, right? This is a real commodity. So what would drive it to 41? What's the macroeconomics? Deal with Iran. I wouldn't make that big of a deal about it. I wouldn't say it goes to 41 because of a deal with Iran. No, I mean, again, it's my opinion, right? Shale oil producers, but we already have that priced in, and it's worth 44, and we're past that dock. So, a supply increase. Well, why would the shale guys do that? See, right now, those shale towns in America that used to be boom towns, they're now ghost towns. So why would want to add more oil and drive down the price? Okay. And so Oscar says, well, Saudi Arabia. Well, Saudi Arabia's already done that, where even though more and more supply was added to the market, they kept production the same, helping to drive prices down. I also think some of this move is the CIA punishing Russia for taking over the Crimea, but whatever. So I'm not as radical. Let's say I understand technically this can do whatever, but I don't foresee oil at that low. Okay, 50 I think is going to be a difficult psychological barrier to break. Okay. So I don't know. I'm just sort of just not up. So here's the logic. If price goes to 75, the shale boys come online now, and then we come right back down. But I think driving oil prices down is more difficult. Lower than this, I think, is difficult. Yeah. Lawrence says world growth could drive things up. Yeah, but that's why we watch GDP, right? That's why you guys watch GDP, right? What's the world doing? Do they wake up in the morning and sit on their butt all day, or are they being productive? How about industrial production capacity utilization figures? Are the factories running? Are they running at 60% capacity? Or are they being fully utilized? Because that'll give you energy demand, so on and so forth. Well, if the trend in demand is going up because of improving global macroeconomics, then eventually energy is, demand for energy will go up faster than supply can be provided. This is how you make money. You got to think 3 or 4 or 5 steps ahead, right? Right? A couple of years ago, or several years ago now, the U.S. crop report came out. Yep, the U.S. crop report. And at that time, because of high oil prices, the United States decided to plant a lot of corn. To say it differently, farmers that normally plant wheat planted corn. And it's public knowledge, guys. It's tracked by the government. It's through insurance, right? So it's released. So why is that valuable? A, there's going to be too much corn. So sell corn futures because there's just going to be too much corn. B, there's going to be a shortage of wheat because they decided to plant corn instead of their normal wheat. So wheat supplies will be lower than previous years. So buy wheat futures. And then corn takes significantly more fertilizer to grow than wheat. So demand for fertilizer products are going to be significantly higher than a normal year. So buy the Potash Corporation of Saskatchewan. And then farmers that normally plant wheat now are planting corn, and they're going to have to retrofit their combines and buy the corn attachment instead of the wheat attachment. So they just go to the bank, borrow some money, and go to the John Deere dealership and buy the thing that harvests the corn with their combine. Boom. I made those calls, and they all came out incredibly, incredibly well. I think wheat prices doubled. I think John Deere went through the roof. I think even Potash Corporation of Saskatchewan doubled, all because of a crop board. And all you have to do is think, if then, right? If then. If this happens, what's the consequence? Who's the winner? Who's the loser? Just like what we were talking about with the bird flu here in the United States. They had to kill a whole bunch of hens, the egg-laying hens, right? Not the meat hens, but the egg-laying hens. And I'm sitting down with my wife and my children having a picnic in my backyard, and I say to them, who do you think the winner is going to be? Who do you think the loser is going to be? How can we make money from this? This is what the conversation I'm having with my wife and my 8 and my 7, or my 9 and my 8-year-old, right? Good conversation, I think. Now the challenge is it should be every day. So I look at this chart and I say, well, this is more than a currency. Somebody's going to win from this. Somebody's going to lose from this. What could possibly drive oil prices down to 40? Who is going to throw that money away? Some guy in South Dakota wants to wake up in the morning and produce more oil at a loss? Why would he do that? And eventually the world will grow, right? And so maybe we should watch GDP. Maybe we should watch industrial production and capacity utilization figures out of Europe, but more importantly, out of China. China will help us on our Aussie, Kiwi, and CAD play. But the other side of this coin is I don't think it's going to go to 120 again either, right? Yeah, Ron says, geopolitical risk. That would probably drive oil prices up slightly for a little while, because let's say oil in the region, in the Gulf region, gets threatened. So oil prices come up, and then the shale boys in South Dakota and West Virginia or wherever, they start selling, or they start producing oil, and they drive price right back down. That I understand. I think that kind of stuff's much more likely. You get short-term pops, and then boom, we bring it down. But how are we going to get oil prices down? A global recession? Well, I'm not ready to make that call either. Right? I'm not ready to make that call. So, anyways, thank you for your time today. I hope it was, a worthy investment. I hope you feel good that you woke up in the morning and we had our conversation of the day. Obviously, the risks are still related to the Greek situation, and then the next big event is non-farm payrolls. So just play it safe, stay focused, use your smaller time frames. All right, pick a direction, use the smaller time frames, and even if you don't trade, at least observe what's happening, because your brain doesn't really care if you're trading or not. But pay attention to the higher high, higher low, 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 and just out as a game, count how many there are today on a 5-minute chart. And then the next part of the game is recognizing the first change of trend. Good deal, John, or Ron. Excuse me. Good deal, Ron. The 6, 12, and 24-month outlook. That's very good. So, yeah. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. And I will have the video posted on forex.today momentarily, as soon as possible, ASAP. And I love you, man.